It seems markets are in an elevator going up. Investors are spending big on ETFs, and this is why we're seeing the stock market push higher back toward record all-time highs. So is everyone dismissing Trump's negotiation antics and tariffs? It seems so, doesn't it? My name's Jessica Amir, a market strategist here with Mumu. It's great to have your company with me on this 28th day of May. So stocks are charging, bond yields are lower. We've seen the US 30-year government bond yield now fall below 5%. And that was another bullish sign, encouraging investors to buy into stocks overnight. So if we think about the Nasdaq 100, of course, the biggest 100 tech stocks in the US, that jumped 2.4% overnight, gapping higher. Now, bear with me. This is a technical bullish signal, simply suggesting serious buyers are now stepping into this rally on the belief that US stocks will hit record all-time highs in just a matter of months, maybe even sooner. Now, Nvidia led the rally in terms of the big heavyweight stocks. Nvidia shares jumped 3.2% ahead of their expected mammoth earnings report, which is due out tomorrow. When delivered, this could send Nvidia shares 7% higher. That's if the market gods like what they see, of course. So keep an eye on Nvidia. Of course, if Nvidia disappoints, their shares could go the other way and fall 7%. So keep that on your radar. In other moves overnight, we did see Tesla shares steam train up higher, didn't they? They're doing exceptionally well right now. But Tesla saw a lot of buying, and that's precisely why its shares jumped up 7%. And guess what? That took Elon Musk's net worth to $390.4 billion US dollars. In case you didn't know, he is indeed the richest man on the planet. So why are Tesla shares roaring up? Well, simply people's conviction is rising in the company. Of course, Elon Musk has slipped out the back door quietly out of the White House, really to focus on the EV giant. So that is something for you to consider. And of course, we've previously spoken about the Cybercab being fast-tracked, and that's being rolled out next month ahead of schedule in the US. And it's already underway in pilot plant in some states in the US. Meanwhile, we are seeing the US dollar. It rose ever so higher overnight, and that's because we do have the Federal Reserve releasing their meeting minutes. They're expected to be published, and of course, then we get the Fed's preferred inflation gauge being released. So that is something to keep on your radar. Of course, it could cause a market hiccup. But let's step back, think about the big picture taking place. We spoke about the rally gaining fresh momentum. What am I talking about? Well, there's nothing new to see here. Why are investors charging? Why are they so bullish? Because we do, of course, have got trade wars going on. So the story that is unfolding with Trump's first trade term and trade wars, it seems like that is playing out now again. Markets and investors, they're pretty desensitized towards Trump's negotiation antics and tariffs, and instead we're seeing record amounts of buying into ETFs. Let's think about the most bought ETF on the planet. That is the S&P 500 ETF. The one that we've got on the screen is exactly it. It's the Vanguard S&P 500 ETF VOO. So we've seen we've seen $14 billion of buys into this ETF into the past 4 weeks. So this basically suggests that investors see that we've got a healthy economy and we've got strong earnings from listed companies that make up the stock market, of course. And of course, investors are increasing their confidence in stocks, and that's why we're seeing record amounts of buying into ETFs. Last year, of course, we had a record amount of buying in ETFs, and this year's probably going to be the same. Based on the trajectory that we're seeing, it seems that we're on track for another record year of buying in ETFs. And what does this mean? This means the US and the Aussie share market will be probably back at record new all-time highs very soon, and the markets will probably continue to hit new records just as they have in the past. So we do have a bullish tone for the Asian Pacific market today. The futures earlier suggested a rise of 0.7%. That means that the market down under here in Australia is just 1% away from hitting a record all-time high. Now, what's really interesting is our Aussie share market is now up 14 7.5% from the lows that we hit. What's also really interesting is we've gained more than we lost in percentage terms when the market crashed after Valentine's Day. And this is the most bought ETF down under in Australia. It's the Vanguard Aussie Share Market ETF VAS. That's the ticker code it goes by. And that's seen $355 million of buys in the past month. What's also even more exciting is that bets for July are suggesting the Aussie share market could get to 8,700 points. So that would be a new record. But remember that markets don't go up in a straight line. Today, we do have data out that could dampen spirits if we see that CPI didn't fall as expected to 2.3% year on year. But if we do see hiccup, as in a pullback in the market, I suspect that the dip would be bought over time and the Aussie share market will keep on keeping on and keep on rising. There's plenty for you to consider. For information on the stocks and ETFs that we've mentioned today, head over to Memo's platform where you'll find all the information, or head over to YouTube and you can click on the description.